Deepak, good morning and fantastic to have you back. Deepak, straight off, let me take a dive into some of your preferred stocks. Why do you like PVR? PVR in the past has been volatile, and off late the stock has corrected quite a bit.
It has, but actually it's still remaining in one of 780 to 850 and 70 kind of a range. I think the trigger here is primarily the increased interest in consumer entertainment, their inorganic expansion into tier 2, tier 3 towns as well, and then also the fact that grocers in Hindi movies now are ranging above 100 crores in the first weekend. They are seeing a tremendous amount of growth, where we have a couple of blockbuster releases coming up in December. I mean, releases, blockbuster being expected to be blockbuster. So I believe that this trend should be very positive for a company like PVR.
Deepak, hi, morning, and kudos to you for wading through all the rains and traffic in Bangalore. Must be quite bad out there on the streets.
Oh, it's well. I would say we're not as bad as Chennai. So my sympathies are with people in Chennai right now.
Thank God. But the infrastructure in Bangalore is way worse. Tell us, what is it that you're liking? Any of the infra stocks or themes that you're betting big on?
Right now, probably in more anticipation of what's happening, I'm actually positive on liquid logistics and logistics in general. We like the industry, and they're starting to move. They've corrected, much of the logistics packs have corrected significantly from their peaks. One particular company here is Aegis Logistics, which as a disclosure, we have been long on. We've recommended as well for a while. They own liquid logistics operations in ports, and they have now got land in a couple of more ports, which they're targeting in the next couple of years to progress on. We believe this is a big industry because both from chemicals perspective and also from oil handling perspective, Aegis is likely to be a big player.
Okay, and Deepak Shenoy expects an earnings CAGR of 30% in Aegis Logistics over the next couple of years, so that explains his rationale. Deepak, a lot of people like picking up falling knives. This one, Eros International, is falling thick and fast. Another 10% down today if the pre-open rates are to be believed. Has it fallen enough, or could it cut your hand if you try to pick it?
Actually, the problem is the stock isn't just an Indian stock anymore, right? So it's more like even the Indian company has subsidiaries in the British Virgin Islands and a couple of other non-Indian territories. The US parent has other operations in Dubai and a couple of other places. So it's not an easy balance sheet to analyze. We've been trying to look at it to see if it is a falling knife or is it just a temporary dip, and the answers at this point are not very clear. There's a lot of inter-company, inter-subsidiary transactions that happen. There's a lot of things that remain unexplained. Although we could say that some of the questions were raised by short sellers. Sometimes short sellers do raise very pertinent questions about economics and also about financials. I think some of them are valid. I hope the management manages to address them, but at this point, management response has been short of expectations. I wouldn't buy it right now.
Well, Eros may be a falling knife, but Indigo, Interglobe is completely the other way around. It is a rising tide. At 1,000 rupees, with the expectations of 80 rupees EPS for FY16, how's the stock looking?
It's cheap, think about it. If you look at it from that perspective, as a EPS of 80 rupees, it's a 12p stock. It's cheap compared to the rest, and the fact that if Indian aviation is to grow, which it hasn't. I mean, I have my doubts on it growing substantially, but if it were to grow a lot, then this would be a cheap stock and the biggest player in that sector. Having said that, I believe I think the crude price fall has contributed substantially to margins. I hope that doesn't change for it. But in the next 2 years, I don't see any serious headwinds against it. So I believe if there are headwinds for the airline industry, it will be a price war. And I do expect that in the near term, but I think Indigo will still emerge profitable through it.
But Deepak, just a very quick word in pharmaceuticals as well, considering this speed breaker of sorts that we've seen, considering the clampdown from the US FDA, how would you approach some of the individual names like a Sun Pharma, a Reddy's, or for that matter, a Glenmark within the pharma pack?
Aisha, we are long pharma, so in a way we are a little disappointed by what happened. But this is probably the nature of the game at this point. There are two issues here. There is the issue with the FDA, and there is also the Trans-Pacific Partnership, which will probably crimp the export potential into some of those markets of our company. So, given those are headwinds, but we have a tailwind of the dollar at 66. Which should be a beneficiary. But all in all, I believe this is still a growth industry. I still consider that it will grow faster than perhaps equivalent packs in the IT or in other export sectors.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.